What is going on, guys? Good morning, good afternoon, good evening, wherever you are in the world. Hope you guys are doing great. I'm going to give it another 1 or 2 minutes for everyone to trickle in here, and then we'll get going.
Still have that countdown timer thing? Forgot about that. Can't put that in there, I think.
Sure. We have quite a few setups this morning, so be sure to take some notes, mark off these levels that we're about to go over with you, and come with questions at the end. We're going to stay out for a little while and answer some questions for you. Hello from South Africa. You guys have load shedding going on?
Yeah, I heard it's crazy right now.
Yeah, I heard it's wild.
Couldn't imagine if that happened in the States. There would be an uproar.
All right, it is
7:05
a.m. Eastern. I'll start in about 1 minute.
What's everybody in? What you looking at? Yeah, we do have some news today. Just central bank chairs speaking, I believe. Trying to get inflation under control. Raising rates at rapid levels to bring inflation down will induce a recession probably late 2023, 2024. But not anytime soon, in our opinion, from a fundamental perspective. We don't really care about fundamentals anyway in trading, but I just find economics interesting. So really raising rates right now as inflation is rampant.
All right, we'll go ahead and get started. Good morning to you all. I know a lot of you probably are maybe in the UK, in Africa, Asia. I don't know where you guys are. Put where you guys are. I want to know where you guys are from. We are currently in the States. It is currently 7:06 a.m. Eastern. Early morning. We got South Africa in the house. Belgium, nice. Egypt. Oh, I had a friend that just went to Egypt. Visited the pyramids and everything. Washington State. Wow, I mean, that's 4 in the morning for you. Scotland, Mali, nice. West London, Chicago. Nice. My brother's in the Navy in Chicago. Nice. Jamaica, beautiful country. Morocco, New York. Awesome, guys. Love to see it. Love to see you guys are tuning in from all over the world. It's awesome. All right, let's get started, guys. We have a lot to go over today. So make sure you take good notes and mark off these areas of interest as we go. So I'm going to share my screen here. Here we go. Can you see this? Everything good, Aiden, on your end?
Yeah, you're in canvas mode, right?
Yeah, should be.
Yeah, it looks good.
Looks good. All right, guys. So I'm going to go over a few pairs. Aiden's going to go over a few pairs. Then we're going to take some question at the end. Have some decent looking setups this morning. Hopefully we can see these continue throughout the week. So I'm first start off by talking about Euro AUD, Euro NZD. So these two pairs are very interesting. And if you have been following us for quite some time, I've been talking about Euro NZD for over a month now, and noting that we would come into this 1.7, 1.71 region, which I'll discuss in a minute. But Euro AUD is a very, it's very similar to Euro NZD, and it will most likely follow suit. So I want to see continuations to the upside on Euro AUD. So higher time frame, we can see that we currently are in this pullback phase, right? Overall, we're bearish. And we have a lot of imbalance to fill. Very low resistance, just trickle, trickle, push, 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 right? Now we're starting to get this retracement. So I feel as if we're going to go short overall, we really ought to come into our prior structure right in here around, let's just call it 1.55, 1.56, somewhere in there. So we still have a few hundred pips to go to the upside, filling up some imbalance prior to most likely an overall push to the downside. Okay. So with that in mind, we can look for lower time frame setups. We can see that we are above all the EMAs here. So it's giving us that directional bias. I was really hoping a couple weeks ago, the beginning of June, that we would push down into our overall level of imbalance and demand here at 4,750 and 4,7. Unfortunately, we never hit that level. And then we just kind of pushed up from there, made higher highs, higher lows, but that's okay. On the 4-hour time frame, actually, I'll start off with the 1 hour. The 1 hour time frame, we can see that we created a low on the 23rd. So this was last week. Created some liquidity, pushed down into our most recent area of demand, had a fake break of structure, and pushed back down, sweeping the low again. Okay, so we still maintained our level within this demand here. Okay, creating higher highs, higher lows, kind of just chopping around. We had that liquidity run 9 a.m. yesterday. So this is Eastern Standard Time. This is New York session open. And then we had the break of structure again today. So what I'm expecting is a price to pull back for a continuation. We are above the 1 hour 50 EMA here. It is approaching our level, 1.52516. 4 hour time frame. This is our most recent area of demand. You can see demand, we sold, we bought, broke the counter trend. We're looking to pull back down into this imbalance, back down into this demand here. Further to the continuation to the upside. First take profit can really be above the most recent swing point, 5.3. Let's call it 5.35, back up to the upside. So that's what I'm expecting. Euro NZD, very, very similar. I'm looking for just continuation to the upside. There's really nothing to play off of in here. You could say that based upon price action in and around this level, we had liquidity being built up. We took that liquidity coming into our demand level that we sent to our VIP crew right there. So we're still in great profit. And then we broke counter trend structure. Where's the counter trend? Lower low, lower high. I guess you can call that lower low, lower high, lower low, higher high. So that was the counter trend structure. So I would say that we could potentially come into here, our last sell to buy, right? So liquidity coming into our area of demand. Now this area of demand was created after we accumulated in price. So we can see that we were expanding higher high, higher low, higher high, higher low. We came into our last point of return, our last point of demand in here. There's a little, I think 15 or 10-minute area of demand there. We accumulated in price, came down into it, tapped into it perfectly, and then sprung from it. So the accumulation, we sprung, we broke the counter trend. You can see here we closed above this level, and then we pulled back, tested a mini area of demand, and then continued, made the overall higher high. So we had the overall pullback, right? And I thought this would be a great area of interest because not only did we have demand here, everything else in here has been balanced. So we're good here. We don't need to mitigate anything in here. But in here we have imbalance as well. So I figured, 1.6697, 1.67 would be a good area to look for buys. We had that. So, if we do have a pullback, we do have relatively equal lows in here. So we may see a run on the liquidity coming back down into sort of this demand zone here for that continuation to the upside. We will be hitting 1.7, maybe not today, maybe not tomorrow, maybe not this week if we just decide to chop around, but eventually we will hit 1.7 or 1.71. That is our higher time frame area of supply. So be on the lookout for that level to be met. I will be looking for potential shorts when we get into this level, but I'm going to be very patient because I want to see clear distribution and a clear momentum shift prior to selling, since this is a higher time frame zone. So we'll keep an eye out for Euro NZD to continue long into that level. So Euro AUD continuations the upside, Euro NZD continuations up. So mark off these levels 67577, something like that, and then Euro AUD 52516. Continuing here, GBP AUD. So this was something I talked about within VIP yesterday. So those of you who watched that video I created, congrats if you took this trade. We currently are in a range here on GBP AUD, higher time frame. So this is not the most highly probable setup that we tend to like to see within our everyday trading. We can see we're not making higher highs or lower lows. We're just ranging. However, what we did do a little while ago was within this wick, see this wick right here, this high, we swept liquidity here and we came into some sort of 10 or 15 minute area of supply. Now, I would not ever have placed a sell limit at that level. But after seeing the reaction, the pullback, and the continuation, I marked it off to make it kind of look pretty. We can see lower time frame that we did distribute in price. So high, 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 very subtle higher highs, higher lows. We failed to make a higher high off of our last point of demand, right? Because demand here, higher high, demand here, higher high, right? We never formed a higher high after we pulled back, because that's what you'd naturally expect. Higher high, higher low, higher high, higher low, higher high. We never got that. We broke back to the downside, flipping demand into supply, right? So this flips to supply. We pull back into that level. Perfect. You could have taken that trade. Then we rolled over back to the downside. Lower low. So again, lower low, lower high, lower low, taking it off of the imbalance between this wick and this wick. So anywhere in between these two regions of price, stop above the high here, area of supply. We're not falling. Nice reaction, double doji here, and then engulfing. So I will be looking for some sort of retracement. This is good for a retracement back into premium to then sell. So just back into structure, I would say, yeah, 7691, 77, somewhere around that area, and then look for continuations to the downside. We can see that we should probably be taking all this liquidity here, here, and here. We have quite a bit of imbalance to be filled, right? So GBP is quite weak at the moment across the board. So I want to be looking for continuations short on GBP AUD. 15-minute time frame, I'll just scale in here. Actually, I'm going to go to the 5-minute. If you are not sure about whether a level will react, wait for confirmation. So you don't have to set sell limits here immediately. You could have, and I did, because I'm a little more of a risky trader, and I understand my own risk management. I don't over leverage, so I'm able to do so. So I set half risk position here. If it hits my stop, oh well, I only lose half risk, so 0.5%. If I win, great, I'm still in profit. Now to add additional positions, you wait for confirmation. So we can see that we are again starting to slow down, just discrete higher highs, higher lows, possible distribution. I'm going to go to my VFI here. This is really the only indicator I use besides the EMA. And we can see that we are diverging. Price is increasing, volume is decreasing. Indicates a potential reversal. Doesn't mean it's going to happen. It's just a good confluence to have. So you really look for divergence when you come up into areas of interest. All right. So we had our final run, then we broke the counter trend. So really just pulling back up into most recent structure. Our last buying pressure may be back up into here, but then looking for continuation short, and then we'll take it lower. And then we have a lot of trend line liquidity here. How many people do you think are buying off of each trend line touch? So looking to take that liquidity now. So that's GBP AUD. NZD USD, I'm going to go to the higher time frame. Dollar is overall bullish. We may see some intraday or intra-week weakness on the dollar, and that's okay. But overall, we're still quite bullish. And just looking at the DAXI higher time frame, we can see clearly we're in a bullish market. Okay, so going to NU again, it's good to understand where the liquidity is. Higher time frame first, because then it can give you one, an overall bias, but two, an overall objective into where you could be looking to buy or sell into. In this case, we're selling, so where's our objective short? So going to the weekly time frame, and we don't really need to do analysis per se off of the weekly in the sense that, oh, we're looking for, equal lows to be taken out, sell to buy, looking to come into a level. I mean, that's great. It's important that we're looking for this level to be met. So lower time frame, you can be selling into it, but you don't necessarily have to wait for price to get into this level before looking to potentially buy, because it would take weeks or months for you to take a trade, right? You'd really just look for, on the weekly time frame, potential areas of interest for price to come into and overall trend. So in this case, overall trend is short, right? We're looking to come into this last sell to buy. We can see the liquidity run that happened here. Perfectly equal lows. Sell, buy, reprice, continue. A lot of imbalance, right? Oftentimes when you take liquidity and you have an immediate reaction back the other way, which is expected when you take liquidity, right? You oftentimes have some sort of repricing. This is just the bank algorithms repricing itself. It usually results in an area of demand or supply being created. So in this case, demand, you pushed up higher, creating the imbalance. So we want to come back down into that level. Really want to see 6150, 61, or even 6000, psych level for this pair. So scaling in 4-hour time frame. Let's see, right in here. Lower low, lower high. This is a lower high. Why? Because we never closed above previous market structure. Also because we never reached our higher time frame objective. But we can see the wick that occurred. This is just a liquidity run. If we were going to go long from this level, I would need to see not only a closure above it, but maintaining price above this high. And I would like to see, the law of effort come in and see momentum for potential continuation to the upside. But again, we didn't. We just licked it and then continued back to the downside. Failed to make the higher high off of the pullback. See what we were expecting. Higher high, higher low. We were expecting that naturally, right? That's what you would expect naturally in structure. But we didn't. We failed. And we pushed back to the downside. We pulled back, mitigated, continued. Pulled back, mitigated, continued. Pulled back, mitigated, continued, right? So now let's scale into a lower time frame here and see what we can find. So we push back up into supply, right? Again, same sort of deal happened. Counter trend move, higher highs, higher lows. Low, high, low, failed to make that higher high, and then we made the lower low, closing below structure. So where do our eyes go? Most recent demand to supply flip. This flips to supply, and now we're looking at this for potential shorts. And that would be expected because 1, we came into supply. 2, we have shifted structure lower time frame, and our overall bias is short coming into the higher time frame objective. So the higher time frame and lower time frame are now in conjunction with one another. So we're looking for pullbacks into imbalance, into this last point of supply. Really just nothing else to play off of, just only this area of interest here. There's nothing else in these candles. You could have gone off of the imbalance there, this mini area of supply there, but nonetheless, we rolled back over. We tapped up into another level of supply here. I drew this up after the fact because I wasn't expecting price to react off of this. I didn't take a short from this level because we had relatively equal highs here. So I was hoping, maybe we'd have some sort of buy to sell. That would have been great for a counter trend break, liquidity run, pull back short, but obviously we never got that. That's okay. We just adapt to what the market is showing and telling us. So the lower low was formed. We closed below the level. And now I'm just simply looking for a retracement back up into premium for a continuation. All right. We go to the higher time frame, 4-hour time frame. I'm just going to remove all the drawings here. Where is the supply? So after the structure was broken, we pulled back up into our imbalance and supply. Then we had the higher high, higher low, and this is better seen on the lower time frame, but then we broke counter trend again. So where is our supply? It's right in here. More specifically, right here, right? So this is where we really want to pull back up into. And where's the 4-hour 50 EMA? Right here. That would be a perfect confluence. If we pulled back, right, it would tap into the 4-hour 50, continuation to the downside into our overall level. And we can see that we never took out this low yet. We still have kept this low intact, which is also a good confluence because that would be, the draw on liquidity. So I'm going to go back out here. 62816 is my area of interest for this. We can also see we have more, we have another draw on liquidity buy side. So not only do we have a draw on liquidity sell side, meaning we're looking to take out this low, but also we have relatively equal highs. So we really should be taking this liquidity out, coming into our area of interest, and looking for overall continuations to the downside. So that's why I say intraday, intra-week dollar sells. So XXX USD longs for overall continuations short. USD CAD, briefly go over this. And this is what Aiden was talking about over the weekend. We can see that higher time frame shift in structure, higher high, low, failed to make the higher high, lower low. So structure has been shifted, and we can see higher time frame we're overall bullish, but we're having the structure shift to have that overall pullback potentially back into discount, originally where we mitigated our daily sell to buy. So he was talking about the lower time frame counter trend. Again, high, low, not really a higher high, but high, low, demand. Each swing point has its own demand level. Demand was invalidated because why? We never created the higher high that was naturally expected, right? We failed and we made the lower low. So this now shifts from demand to supply. So I was hoping at the beginning of the week we would get that retracement back up, fill in the imbalance, tap up into what was demand, now supply, 1.2958, and then have the rollover to the downside. Still could happen, definitely. We still have way more room to go to the downside. So I would expect any pullback to result in another push to the downside. So coming back up, filling imbalance, we have the drawn liquidity again, just like NU, equal highs. So if we get back up into it, that would be great for shorts from 1.2958. USD Swiss franc is relatively the same. However, we're seeing a lot of momentum right now. So just sort of waiting. There's not anything really pertinent at the moment here. If we can get a retracement, great. If not, then we just leave it alone. We are in a huge bearish market right now, overall shorts. We can see that we had buy to sell, liquidity run, descending liquidity again. So that lower low, lower high, buy to sell, liquidity was run, pull back into the sponsored move. Then we fell again, breaking the counter trend. Pull back up. We didn't mitigate this level yet. You can see that we had our buy to sell. We also have imbalance between this wick here and this wick there. And stretch that over. Descending liquidity again. Oftentimes, I say this over and over, oftentimes you will see liquidity being built up prior to a level being met, right? Freeing up liquidity allows the institutions to place all these orders at the level to mitigate and continue in the overall direction. So if we push back up, sweep this liquidity, I'm going to be looking at taking a short from 9594 back up into this institutionally sponsored candle that resulted in the lower low, that took liquidity, that filled, or well, that mitigated this level here as well, that took liquidity again. So it's just playing off this mitigation train and looking for where liquidity is resting. So 9594, mark that off, have that for later. We can see that we're in an overall bearish market here. So really, where could we be targeting overall? I don't know, at least back down into demand, 9460, 9350, I don't know, maybe lower, but we still have more room to go. So any pullback, if we get that pullback, we have more room to go to the downside, we can be looking to sell. Now, I say room to go. What does that mean? That doesn't mean that if we pull back up into this level, we should just be immediately selling. Well, what if there was a clear, perfect demand? I'm pulling this out of my ass here, guys. Perfect demand here. There's no demand, but I'm just saying, what if? And we came into that first, but you guys didn't do top down. We didn't realize that was a demand. We pulled back up into the level, and now we're like, oh, we're going to short. Perfect setup. And then it just runs your stop. Well, why? Because we already had the higher time frame objective met. So that's another thing that you guys should start to pay attention to if you don't already, is first and foremost, doing top down is so important. Going to the weekly, daily, 4-hour, looking at where the liquidity is, where the structure is, so directional bias trend, and where can we be coming into. So if we're selling off here, where is the objective? Where are we going? So that would give us an understanding of, okay, well, if we have a potential setup for a short, do we have room to go to the downside before coming into our objective? If the answer is yes, then great. You can take the trade. If not, you need to reevaluate and see, okay, well, have we already come into the objective? Are we going to potentially reverse? So that's why when people ask me, hey, what time frame do you look to trade? I trade any time frame that presents an opportunity. I'll trade the 1 hour, the 2 hour, the 90 minute, the 16 minute, 25 minute. I don't care. Whatever looks the prettiest, that's based upon top down analysis and the concepts that we teach, I'll take a trade. GJ, I don't know if I want to go into GJ. It's not really the prettiest. It's sort of similar to EJ, and I know Aiden's going to go over that in a little bit. I really want to get back above 166.27 before looking for buys, just because we haven't broken the counter trend structure yet. We can see that we still are in this pullback phase. I want to get back up into premium around 167, 1250. So we reacted from an area of demand. We swept these equal lows. We had the retail head and shoulders pattern that, of course, always loses because retail doesn't know what they're doing. And then we're pushing back to the upside. So continuation to the upside is expected. I was really hoping that after this sell into our demand, that we would break the counter trend and have an opportunity to pull back into a level to buy. I marked off this level this morning. I think it was a 30-minute time frame level. Yeah, it was. We can see here that we had our 30-minute, so we had our rally, we had our retracement, and then our continuation. We never broke the counter trend. We had this area of demand. We did come into it now. I'm not taking a trade because it didn't meet my rules because we never broke and closed above this level. Once we do so, I can potentially be looking for a pullback to buy it. Well, what if this happens? What if we do this? Then what happens? Do I buy it? No. Objective met right there. So that's something we just have to pay attention to. And just really what separates amateurs from professionals, because you have to look at every single solitary angle. Not to say that we can't go higher. This is just a level of interest for me for potential shorts because we haven't met our overall objective yet. This is the overall level I want to buy from. Lower low, lower high, lower low. This high produced this low. This is just overall pullback. So when we get back up into this level, it's tricky. If we buy it up into that level, great, take profit. You can take 50%, 75% off there, maybe leave a runner just in case it just blitzes right through. But in case, you don't really want to be, if we react from that level, you don't really want to be looking for buys yet, right? Because that is a higher time frame objective. We could see that rollover, right? So this 1 drive, 2 drive, 3 drive into this level, and then the spring. So market structure is so important, and that's what really we pride ourselves in our teachings. Structure is something that we have probably at this point mastered since we've been doing this for over 5 years now. NZD JPY. I have 2 more, and then I'm going to hand it over to Aiden. So NJ is very interesting. I'm going to go to the higher time frame here to show you. I'll start off with the 4-hour. We are extremely bullish. I will say that. We are extremely bullish. But I see a counter trend selling opportunity. So as long as my confluences are met, and again, we have more room to go to the downside before the overall objective is met, then it's okay to sell counter trend. So in this case, we can see that, well, obviously higher high, higher low. So naturally I was expecting a higher high, but we stopped. We started to distribute around 86.6. And what I noticed was there was this area of supply, okay, followed by the imbalance. We had liquidity run, all this liquidity from here, 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 and here. We ran it, we fell. Pulled back up into this level. I did not short that. I shorted in here after the confirmation, but there was no telling that we were going to go short because we're bullish. So we pulled back, and then we failed to make the higher high again. So obviously I was expecting, higher high, higher low, higher high sequence. Okay. We never got that. We failed to make that higher high. That doesn't mean that we're bearish. That just means that we're not ready to push up higher yet. We're still in this pullback phase. And we can see clearly ascending liquidity, sell to buy. So if we are to go long, I would expect it to be from discount around this level here, around 83.7. Okay. We have imbalance because look, remember what we talked about before? Sell, buy, reprice, continue. Demand, highly probable, highly sensitive region, lines up with the prior structure here. Right? Support, whatever you want to call it. Break back above it, support again. So that's the highly sensitive region, 83.7. So that's really where I want price to come back down into. So until this price action was seen this morning, there was no setup whatsoever. Because, I mean, you would have probably considered this to be probably bullish. I mean, until we had broken counter trend structure, I wasn't even looking for sells because price could have easily just continued, right? However, we did react off of something. We reacted off of something and broke structure. So when I saw the liquidity run, this descending liquidity, buy to sell, 2 in the morning, so London session open, buy to sell, and we broke structure, I looked over here to see what we have come into. And there was like a tiny 15, 10 minute, last buy to sell. I think it was 15 minute. I'll just check really quick. Yeah, there was. This is not a sponsored candle, guys, because what's a sponsored candle? Something that takes liquidity. This didn't take any liquidity. It just had a little bit of an imbalance between this wick and this wick here. It is the last buy to sell. We had the engulfing and the re-engulfing back to the downside. So obviously you would not have placed a sell limit there, but I saw the reaction and the break of structure and then the descending liquidity that was taken. So I figured, okay, I just mark this up, make it look pretty. So we broke counter trend structure. So now where should our eyes go? Our eyes should go right here, most recent area of supply. Why? High, low, demand, failed to make the higher high, okay? Flips to supply. 1 hour time frame, we have imbalance. So break of structure, pull back. This is supply between this wick and this wick. We have imbalance. Only selling was offered between these two regions of price. So I'm looking 85.3 would be a really good area to be looking for shorts because we have broken the counter trend structure to the downside. So now we should be looking for pullbacks to short. We have room to go to come into our higher time frame objective. We have a lot of liquidity still resting here, right? And we are now in this pullback phase because, low failed to make the higher high and lower low again. So 1 drive, 2 drive, pullback, 3 drive is what we're looking for. Okay, so something very similar to the GJ, I believe. AUD NZD, last one. So I had a question on this yesterday. And we were looking, the individual who asked was looking for shorts in this region. And I'll explain why that is not the case, but could potentially be. I noticed this structure here. It was beautiful structure. High, low, high, low, high, low, right? We swept a lot of liquidity, sell to buy. Higher high was formed, relatively equal highs. Came back down, swept liquidity again, these relatively equal lows. And we pushed down into the level. We kind of sprung from it, but we came down one more time, sweeping the descending liquidity on the lower time frame. You can see that here. 1, 2, 3 touches, so kind of a fake BOS. We pushed back down for the 4th touch. Many retail traders were probably buying, but then we took their stop losses, and then we rallied back to the upside. So breaking the counter trend structure, pull back long. I didn't buy it in here, just letting you know. I didn't buy it yet. I was waiting for more confirmation, and we can see that we finally, broke the counter trend, closed above it. So I'm looking for pullbacks into our most recent area of demand. This confirms it. We should be looking to go long. Now, again, I say confirm, and I say confirm lightly. Confirm doesn't mean 100% in Forex. Nothing is 100%. Confirm means giving us more of a highly probable setup, or it's more highly probable that X, Y, and Z will occur, right? So in this case, this is confirmed because liquidity was swept, counter trend was broken. Now the lower time frame is in conjunction with the higher time frame. We came into our LPOR, last point of return, after sweeping liquidity, sell to buy, higher high, higher low. We should naturally expect a higher high. Also, why does this give me conviction to long this? Well, daily time frame, we just zoom out. See this high here? We never took our 2018 high yet. So 1.11750 is still on the table. We are above the daily 50 EMA. We just tapped into it. We can see the double doji that we came into, created another double doji here engulfing. So we should be looking for pullbacks, into our demand, daily 50 EMA, and then looking to run out 1.11750, and then really ultimately come into 1.12. That would be the most recent psych level for this pair to sweep this prior high. So that's what I'm looking for on AUD NZD. Now, someone asked me about this level here. Well, why is this not a valid supply level? Well, because for one thing, it's not really in premium price. If I was looking for a short, I would be looking for anywhere between this high and here, because we have this little tiny area of supply. We also have the counter trend. high, low, high, low, high, low, high, low, high, low. Failed to make the higher high. We made the lower low. So now this becomes our supply flip, right? So really anywhere in premium, either this region or this region, I would be looking for. So really starting from here. However, not to say that we can't react from this level and go short, which we had a tiny bit of a reaction, but nothing too crazy. If you're going to look to trade from this level, you need confirmation. You need some sort of maybe distribution or counter trend break. But again, at this point, there's really no point of trading this because our overall objective is 1.1. And look how that lines up. Look at the open or the start of this demand level. 1.1 is right here, essentially. See how these round figures tend to line up with these levels? So you wouldn't have sold it in here anyways, even if you had a particular setup that was confirmed. Why? Let's just say you got in right there. Okay. Stop loss right there, maybe 20 pips, push back down. You would have had to take profit right there. That's a 1 to 2.8. That's really, in my opinion, not good enough. I really aim for at least a 1 to 3. Really, a 1 to 5 is really my minimum. But just because you have a perfect setup doesn't mean you should always take the trade. What's your risk to reward? So these are other things that don't have much to do with the technical aspect of trading that's still so crucial in overall profitability. Because if you know that your win rate maybe isn't as high, but you tend to have higher risk to rewards, well, having a 1 to 2 or a 1 to 3 maybe wouldn't be that good for you to take. It wouldn't be based upon your rules, and it's not based upon mine. So I wouldn't have taken that. But for this case, I will be taking this because we have confirmed it. So I will be looking at placing half risk position, looking for more confirmation. This is what I would look for. So some sort of counter trend, maybe reaction, and then I'd place the rest of my position upon more of confirmation, lower time frame. But we can see that even up into 1.11750, that this is at least a 1 to 3. It's a 1 to 3.5. Really, I want to get back up into 1.12. That would be about a 1 to 4. So that's really on the brink of me taking the trade, but it does meet my rules in terms of risk reward. So guys, I hope you took some value from this. I'm going to hand it over to Aiden now. He's going to go over a few pairs, and then we'll take some questions at the end. So hopefully you have these levels marked off. If you don't, I can briefly go over a few that maybe you missed throughout, and then we'll wrap it up. So I'm going to stop sharing screen here and hand it over to Aiden.
All right, sweet. 1 second, guys. Just going to go over a couple, and then so we can have some time to answer questions. I know Nate, we're capped, right?
What do you mean?
Like on time?
Yes, we are. We have 19 minutes. Yeah.
All right, I'll try to be quick. Nate, I think you missed your calling as a preacher.
Preacher. Could be.
All right. So really quickly, guys, just a couple of pairs I'm looking at. Euro JPY. I want you guys to look at these equal highs right here. All right, and first let's hop out to the weekly time frame. Now, Nate talked about objective. And for this one, obviously, it's been extremely bullish. And so I think that momentum is going to carry to the upside coming into, this weekly inefficiency here, okay? Now that comes in at about 145. So let's go ahead and hop down. 1 hour time frame. And here's the setup for this morning, guys. Head and shoulders pattern, left shoulder, head, right shoulder, run the neckline of liquidity, trade into discount, okay? And then we break structure to the upside intraday. So I think for today, we can simply look at this inefficiency as our POI. And really for me, it's just, are we going to get down into discount this morning, right? We've broken structure. We've run the liquidity. We know where the momentum is, that being to the upside. We traded into demand here perfectly with this London session. Time and price, guys, 2 a.m., 3 a.m. Okay, and so I believe London session is going to give us that low of the day, okay, for a New York retracement and continuation. And we have these equal highs. We ran it just slightly. And what you notice often is you'll run it slightly, pull back to pick up more orders into discount, and then you get the firm run on that liquidity. Okay, and so I think now we should be pretty good for a strong move through those equal highs and into that objective. Okay, and so let's just hop down a little bit lower. And for me, guys, like I said, I think this level should be good enough, but really just fib this thing. Okay, in my opinion, just throw a fib on it. Whoops. Throw a fib on this and really just, we're looking for intraday equilibrium or discount on this. Okay, that would be enough, in my opinion, if we get that, at least the 50%, to go ahead and take this higher. Okay, so here's the liquidity. You almost always see a run against the liquidity, taking that liquidity London session open, right? And that's that 2 a.m., 3 a.m. candlestick. And then London session provides us the unidirectional swing of the day. Oftentimes, New York provides that retracement for discount intraday for the continuation. So hopefully that makes sense. I think 143.2 will suffice on this one. The momentum is really to the upside. I really think they want to dig out the liquidity resting above these highs here. Like I said, we did run it out just slightly, but I don't think that's really enough. Oftentimes you'll just see one run and then you pull back to pick up orders, and then we really smash through that liquidity. So go ahead and you can take this high as kind of an initial target, but secondary targets being that weekly inefficiency that we outlined just a moment ago. Okay, so we also have the 1 hour 50 EMA kind of right at this level supporting price, and we don't really care about EMAs, guys. We just use it as an extra confluence, right? It's just the 50 EMA, 1 hour, 4 hour daily time frame, just as an added confluence to our smart money concepts. Okay, and so really like this level for a setup today. Just a couple others. Gold, I don't really trade this one very often, but same kind of premise here, guys. You have the liquidity, you have the London session, engineer the liquidity, London session run out. We have our 1 hour demand candlestick in here. Okay, nice inefficiency has been created, strong engulfing candle to the upside. We did trade into somewhat of demand here to the left, and then had that strong reaction. Okay, and so I think if we can quickly spike down intraday, fill that inefficiency up a little bit, we can get a nice potential rally to the upside. We do have descending liquidity now to be run out. Okay, so really simple kind of setup, guys. I like to keep it simple, hence the name up here. Keep it simple, stupid, simple, or whatever it is, simple, stupid, or stupid, simple. Same idea, right? Everything is simple. It comes down to structure. It comes down to liquidity, and time and price, right? Those three are the most important in my opinion, obviously on top of your own psychology, all right? And so keeping it simple here, I'd really like to see, now that we've kind of engulfed to the upside, a quick intraday spike down for a little discount and then continuation. It looked really nice to me. All right, and then the final one that I wanted to kind of go over is going to be this Euro GBP. And I believe we talked about this one last week as well. All right, but let's hop up to the weekly time frame. Now this one, the ultimate objective, and obviously we've been selling off for quite some time. But we never did really kind of fill in any of this old gap here, right? And I really expect price to ultimately trade down into here. And from here is where I would expect some type of reaction, right? And that would somewhat come into alignment with, what we're expecting on Euro USD, in that we're expecting Euro USD to run those weekly equal lows. And so I still expect, given the higher time frame momentum to the downside, that we will trade into this old gap where we will see some sensitivity. All right. Daily time frame. Okay, we have this kind of falling, wedge or whatever retail traders call it. But all of these highs here, okay, all of this descending liquidity was really run out, okay, with this move here, even these highs over here. All right, and so I'm looking at this 3-hour time frame up close candle. Now, I'm not necessarily going to place a limit. It just really depends on your risk tolerance. But this 3-hour candle does look very enticing to me, right? It not only ran out this intraday short-term liquidity here, but this is the candlestick that ran out all of the liquidity to the left, right? And so this is a true sponsor candle running the liquidity, a very sharp reaction to the downside. You create the imbalance in the market. If you simply look at it from a law of effort perspective, how long did it take us to get down here? And how long is it taking us to get back up, right? So that is indicative of a retracement. Okay, this being a retracement, more or less a flag for a continuation lower. Okay, at least into here, right? As first targets, running out all of these equal lows, engineered liquidity right here. Okay, so like I said, it depends on your risk tolerance. If you're a riskier trader, then by all means, feel free to set a limit kind of at this 3-hour up close candle, or 50% of that. We can take that 50%. Okay, and mark that off as well. That would obviously provide for a smaller stop loss. Okay, and so if you took it off the 50% and you were placing a limit on this one, about 23 pips stop, or even just targeting the liquidity here in this kind of demand, that would be a 1 to 10, right? So just again, like I said, it depends on the risk that you're willing to take. On the contrary, you could obviously just simply wait for lower time frame structure to build up. Look for the lower time frame buy to sell, the break of structure. Okay, the pullback stop loss would obviously go above this high. You might even get a tighter stop to ride this thing lower. Okay, but again, we have been trading up for quite some time. Higher time frame, we technically haven't, broken structure to the downside, but we have come into significant areas of premium after having run out significant amounts of liquidity. All right, and so this is where the aggressive trader looks to get short, right, prematurely almost. Okay, and then if we do end up breaking structure to the downside, then we should be good with our overall bias to continue selling this thing on down into our higher time frame target that I outlined just a few moments ago. Okay, so hopefully that makes sense. That's what I would like to see on EG. I know it's been kind of a choppy week. I mean, just looking at this price action, it's not pretty. If you look over at something like GU, EU, it's not pretty, and that's somewhat typical of summer months. Is this kind of price action here? It's just kind of directionless and choppy, and just kind of running liquidity on multiple sides of the market. Okay, same goes with EU. How are we on time, Nate? I'll quickly kind of look at EU as well. This is another one I keep talking about on our YouTube videos. We have this POI. We did get the reaction from it, but again, we've been cautious about that because the preferred POI is going to be this candlestick in here, right? Where we ran out descending liquidity, traded into supply, created our new low. Okay, I think this might be this move here might just be inducing more liquidity, enticing people thinking that it's going to go short ultimately again, and then use some type of news event as an excuse to really push this thing up into that real supply, into the real premium where institutions want to be selling, and then the sell-off, right? So I'm going to stick to my guts here on EU, really looking for that higher premium price before I look for a final swing to the downside that we're going to be looking to target kind of these weekly equal lows here. Okay, we have engineered liquidity now on the weekly time frame to certainly be run out. Right, we don't make 99.9% retracements and leave that intact. Right, we're just going to go ahead and run that out more than likely. All right, so that's really all I had. After obviously Nate covered a lot for you guys today, so I'll step out of this screen share and open it up for a few minutes for any questions you guys might have. Let's see. All right.
Hey guys, any questions that you have, feel free to drop in the chat. I'm gonna go through a few of them. We only have about 5-6 more minutes. But guys, if you really enjoy this, if this really resonates with you, and you really want to develop these skills on and do this on a day-to-day basis, maybe even make it a career, feel free to hop over to our website, www.arielfxtrading.com, and book a free consultation. We just want to speak with you regarding your goals, how we can best help you, if we are actually the right fit for you, and vice versa, if you qualify for our program. Because we only want to work with a specific type of person, type of trader, and it may not be the right fit for you. If it is, great. We'd be happy to work with you and really develop these skills and get you set up. But again, just feel free to hop over and we'll love to speak with you on a call.
Absolutely. Yeah, it comes down to the right approach, guys. And I did a psychology intro video on Trading Nut channel a couple weeks ago, talking about the proper approach, kind of at the outset of, before you even get into trading, and kind of what your mindset ought to be, where your head ought to be at before you start live trading. So definitely check that one out as well. It's a lot of value. What we got?
Let's see. We are accepting students, however, not as many as before. We only have a limited number of spots. Let's see. Man, some of you people really just enjoy bashing other people. Wow, it's great. I love it. Fuels the fire. UJ, let's see. UJ, I don't know. Did we talk about that in Smart Money Sundays? I believe we did. We may have.
Yeah, I did.
Okay, yeah. Check out Smart Money Sundays if you haven't already. It's on our YouTube channel. We talk about UJ. We talk about a lot of pairs, actually. Any other questions, guys? Have a few more minutes. I'll stay on for a couple more minutes.
Covered a lot today, honestly.
Let's see, why complicate this? We don't complicate it at all. I feel like this is very straightforward. US 30, NASDAQ. I really don't trade those. I like to stick with Forex pairs, but the same kind of concepts apply. Maybe I can go over that on the next live session when I have more time. Wyckoff schematics. Yeah, again, guys, I have 3 minutes. I'll go over all these concepts on next week's live, but make sure you tune back in, ask the same question right when we start, so I can make a note of it and go over it.
Everyone loves NAS.
Yeah, I do.
Okay, cool.
Alrighty,
Probably
well,
answered everything today.
yeah, I think
Quiet
so.
crowd today. Usually you guys are popping off questions to us.
I know. But yeah, make
Yeah,
sure you tune into next week's live. I'll try to do some US 30, maybe some NASDAQ, try to give you some value there. Wyckoff schematics, yeah, I can go over that next time. But yeah, since we're just out of time, I can't really do that today. But yeah, thank you guys for hopping on. I appreciate all the positive and negative comments. I love it.
Yeah, if you guys have any questions, message us on Telegram at Ariel Fx Trading. We'll be glad to help anything we can.
Yeah, definitely. Always here to help. All right, guys, thank you so much. We're going to end this broadcast here, but have a great rest of your day. Happy trading to you all. Stay safe. Use good risk management, and we will talk to you all next week.
Cheers, you guys.
Take care, guys.